The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening on Octo Nation? Today we are taking a look at kind of a SPAC that went under the radar. It merged. I didn't even talk about it because it just wasn't flying nowhere. We're going to jump on in. South Mountain Merger to combine with Billtrust and deal with $1.3 billion in enterprise value. About Billtrust, what do they do? The ticker is SMMC. Digitally transfers accounts receivable and business-to-business payment processes. Our SaaS, I've talked about that a lot. I never told you what it is. It's a software as a service. That's what SaaS means. Also known as subscriberware or rentware. So they're selling a software like a monthly plan, basically, which is a very, very profitable business. Platform achieves this by enabling automated order capture, credit decisioning and monitoring, invoice delivery, payment and remittance capture, cash application and collections. In addition to the platform, we have a dedicated team helping companies achieve their objectives. Billtrust eSolutions customer success team has helped thousands of companies move from paper invoice presentment to electronic. That's great. And now from paper check to electronic payments, our solutions are deeply integrated into the banking and AP ecosystems and Billtrust business payment network, which allows suppliers to fully automate invoices into AP protocols and receive digital payments and remittance data without human intervention to apply the cash. Forget humans, let's automate it, right? It's a business we can invest in. Let's take a look at the investor presentation, what we got going on here. This kind of reminds me of one that came out called Paya. Remember that? It's kind of a middleman money mover. This one is definitely focused on business to business more, but it seems like to me they're more about getting like really old school businesses that are straight paper into totally moving a little bit further. Let's dive on in and see if we can't find anything else though. The SMMC management led Card Connects to success. Return since FinTech Acquisition Corp announced the acquisition of the Card Connect. So they got something called Card Connect. And what are they showing? They've had an 85% return in 4 years, which is great. So they took over something called Card Connect and are making a lot more money. Proprietary sourcing channels and leading industry relationships. Proprietary sourcing channels, you know, they might have paid someone to write up some sort of script to scan businesses that are somehow using non-digital assets, right? So you can get a list of companies that might be using like QuickBooks somehow, and then minus that from the big company list that you can get. And leading industry relationships with strategic corporate and financial sponsors. Strong track record of identifying and sourcing transactions with proven playbook of value creation. Extensive public company experience at Card Connect and First Data. $250 million equity capital raised in June 2019 via a listing on the NASDAQ. Oh, okay. Anchor investments and significant portion of committed capital from long-term investors. Execution and structuring capability with the financial technology sector. So what we got going on here? CCN outperformed the S&P. So Card Connect, I guess, actually already has its own stock, which is cool. And this one's just like boosting it, or are we going to convert to a new ticker? Are we merging a couple companies? What's going on here? Founder, CEO, you know, everything's good on it, right? The South Management Merger is a public traded special cap. Yeah, so they're giving them $250 million in cash, and they're hooking up another $200 million in pipe. You know, see, around this 200 is a fantastic place to be because you can always call them back up. People you got the 250 from and say, hey, can we get another 200? They usually say yes. It's being raised in support of the transaction. Pro forma enterprise value of $1.3 billion, which equates to 10.5 2021 estimated revenue. Wow, that's a lot, right? 10.5 times next year's revenue. That's a lot. Seems like a lot, doesn't it? A lot of them, when they're doing the SPAC South valuation, they're like putting out to like 2025, like 5 years out, and then saying like 3 to 10x, but they're saying by next year. That's kind of funny they didn't use a higher term value on that. That's okay though, because that could equate to about the same as others are saying. Capital structure, $200 million of pro forma cash held in the trust of the balance sheet, 68% of the shareholders 19% SPAC IPO and founder shares. So that's quite a bit, 90% SPACs. 13% of PIPE that'll own. 225 million, of which 200 million has been committed via the PIPE, and an incremental 22 million has been committed in the form of a non-redemption commitment from an institutional shareholder. A whale in there says, it's 22 million, but I'm getting it back. Transaction announced October 19th and closing after SEC review process receipt approval by the stockholders. And Billtrust. Billtrust, we are the leader in digital transformation of accounts receivable in the future of business-to-business payments. Here we go. All right, 1,800 customers. It doesn't seem like a lot for a billion-dollar company to be a middleman of. You know, I know some of my friends have owned credit card processing companies. I know these guys do a little bit more than that, but you know, they would get 1,000 packs and sell them by the 1,000 pack. So 1,800 doesn't seem like a lot. 1 trillion plus invoice dollars processed. Okay, that is a lot of money. So it's not all about how many customers, how much are they spending, because where these companies make it is they make it on a percent, right? So every time someone swipes that Visa card, they are going to get 8%. So the higher money they're spending, the better. 49 billion in total payment volume, 105 million in 2020 net revenue. Okay, that's good. That's really good, especially for a SPAC, right? It's kind of a relief. These guys are actually going to make net, and net is like liquid, that's after all expensive. They're going to make 105 million this year. That is huge. Can someone name another SPAC that's going to make 105 million this year? Holy Toledo. 19%, 28 in the next 2 years, net revenue is what they're saying. 93%, 2019 net reoccurring revenue percentage. Okay, so they're getting that reoccurring revenue because they're also doing some sort of software thing. So that's right. So they're probably making money every time there's some sort of money movement, right? If an employee wants to pay or take money back, or vice versa, an employer wants to pay the employee, anytime there's money moved, they make a percent on that, I'm guessing, and then they're also making money on the SaaS, the software per month. So that's cool. 93% recurring revenue percent. That's big. 100% plus net dollar retention, 69% 2020 non-GAAP gross margin. Any company who can make even over 15% gross margins on that is pretty good. So that's way above all that. Previous experience, these guys have been in it all, looks like. JP Morgan, Green Dot, Jonah Software, Platinum Technology, Paytrust, ProjectWorks. Billtrust equity story, huge TAM with strong tailwinds in the business-to-business community, electronic billing and payments. So it's billing and payments. Proprietary platform combining cloud-based software, integrated payments capabilities, comprehensive end-to-end business-to-business commerce solutions across the value chain, loyal customer base, high retention rates, diverse industry verticals, extensive distribution network with tremendous opportunity to scale and monetize the payments. Cool. Founder-led and visionary management team. Strong revenue growth, high revenue visibility, expanding margins. Huge market with strong tailwinds. Yep. 200 billion global invoices a year. This is just overall as a market. 120 trillion spent in global commercial payments. Business to business is said to go up 22% in midterm growth. Midterm to what? To what date? 50% of business-to-business payments are still made through paper check. That is amazing. Any business owners out there, when people are paying with check now, do you roll your eyes? You're like, oh man, come on now. I know I have some penny pincher friends that own some businesses where they're like, no, we still do credit cards. They're missing out on money because people spend more when they got the credit card because they don't have to see the money leave, especially if they're paying cash. Cash, you don't get charged the percent. You don't get charged the Visa or MasterCard percent, but people will always spend more with credit cards. In fact, they can't see it. They don't see the money. If people are paying cash, they're willing to spend a lot less because they see those $100 bills leave their hand. You can see them cringe when they do it too. Conventional AR/AP processes are outdated, insufficient, manual, and largely paper-based. Request line of credit. Process application and provide credit, okay. Order enabled, place an order, present invoice, pay invoice, apply funds, and update, collect outstanding payments. Okay, so this is a play that I haven't really heard of here. So these people could be a middleman for, let's say, a credit union. Like, say a credit union, when they start the credit union, they're going to find a third-party company, maybe like these guys, who are going to help them set up credit cards for the members of the credit union. But they also need to even have whole dedicated sections for people that are going to call and say, can you give me a higher credit line? I got more bills to pay, or I got laid off, or whatever. They handle that department too. That's interesting. So they also make money in the application of it, order enabling, placing the order, so the whole pipe. So they're owning the whole wave, whole surfable wave of even credit line increase. That's interesting to me. AR is ripe for digital transformation, credit, ordering, invoicing, payments, cash app, collections. When customers don't pay in a timely fashion, how do you follow up effectively? Okay, so these guys are doing collections. Opportunity to drive efficiencies and monetize payments along the process. So they've got a cash app where you can, move and receive payments. Invoicing, great. Ordering, business ordering is complex with desperate needs across verticals. Yes, it is. Business companies sell on credit, and evaluating credit risk on an ongoing basis is difficult. So they even monitor the credit and stuff. I'm really interested in this last one, though, is collections. I know some people that have some collection businesses. Some people frown upon it. I think people should pay their bills. I don't have a problem with people going after people to pay the bills that they said they would pay, and they didn't. But regardless, what I'm getting at is there's a ton of money in the collection business. So if these people are actually in that, where you can actually buy stacks of, let's call it like paper notes from any said bank or car lot, and then you can say, here's a stack of people that have not made their payments. Get the money, we'll give you 20% of whatever you can pull in. So say the person owes 10 grand to them, they'll even say, just give us like 2 grand, whatever you got. If you got 2 grand, let's get it. They're still going to get 20% of that. At least they get something, but it's just more and more income. So that's way interesting. So this one seems a lot wider, a way more macro version of the Stripe thing. The Stripe is still cool, but man, it didn't do anything, right? This could get interesting though. The status quo, massive manual lift and myriad of legacy solutions to send, invoice, and process payments. Here we go. Email and phone, paper check, ACH payments, ERP, bank, buyer, just the whole way. Here we go. Okay, Billtrust is bridging the gaps. Powerful proprietary technology platform and combining cloud-based software integrated payments. My other question is, what's motable about this company, right? Like, what's the difference between them and all the other ones out there? I guess the collections is big, and then upping credit card limits is big. They're just a merger in between all payments. The industry also needs a business-to-business payment platform to connect buyers and suppliers. That's true. What are these payments truly costing us? What are these customers? Why are these customers paying late? How will we process their remittances? Should we participate in these programs? So it would be really interesting to see. I mean, they're saying they're hooked up with Bank of America and U.S. Bank, Wells Fargo, and all that. So I'm wondering if, like, Bank of America's system that offers all this stuff, I wonder if it's actually these guys who are doing it. It kind of looks that way, right? So even Bank of America, they outsource people making this that have already done it. And this is them. Could be big. Billtrust Business Payments Network is the Venmo for business to business. Okay, Venmo is, I think it's like personalized sending money via an app for business to business. Okay, so it's a bridge between banks and AP systems. Business payments networks, connected platform for suppliers, buyers, and financial institutions, online directory with full view of participating suppliers and payment acceptance preferences, complex financial payments, and data streamline reconciliation. Suppliers received homogenized remittance information to apply to their ERP systems. Okay. There is a new generation of companies focused on business-to-business automation. They're saying that they're better than all the other people out there. total payment volume, customers, employees. They've got a lot of employees compared to like Bill.com, in the market, enterprise, mid-market. So they're going after more of like a mid-market to enterprise. And they're saying that total payment volume, there's still room to grow. But if you look at this though, like, so they are going after like the big money customers, because like for instance, so pure payment volume, they've got 49 billion. Bill's got double that, let's just call it that. But Billtrust only got 1,800 customers, which seems like we were saying, not a lot. But then look at Bill, they've got 98,000 customers. So Billtrust is going after the honey buckets. They're not going after one bee, they're going after the whole colony. So, you know, I think they are hooking up with maybe credit unions or Bank of America or something. That's big. Comprehensive end-to-end business commerce solutions across the value chain. Reduce overdue receivables, bad credit, and write-offs. They do collections. Straight up, look at that. Collections. Wow. Okay. That's where this gets interesting to me. Automated credit application decisioning, and they help with, you know, getting people credit cards. E-commerce marketplace with configurable web stores. They can set up online payments for businesses. Streamline and simplify invoices, delivery, and presentment. Accept and manage payments and remittances in an early and L formats. Okay. So they got the cash app, the payment methods, the credit, the order, the collections, the invoicing, the buyers, the payers, the whole thing. Why we win? We deploy great software. We have extensive ecosystems integrations, enabling frictionless money movement, generating high customer ROI, 100% net dollar retention, 50 plus NPS score, or 60 API integrations. Great. Loyal customers across diverse industry verticals. 4 of the 5 largest IT distributors. Okay, here we go. So this is big, like IT distributors. They got 4 of the 5 the biggest ones. 4 out of 10 of the largest medical suppliers. Okay, so that's massive. You know, dude, the people selling the EKG machines and the X-ray machines and all that stuff. Industrials, 4 out of 10 of the largest equipment dealers. 8 out of 10 of the largest building material suppliers. Maybe Cat or something, John Deere. I don't know. CPG, 3 out of 10 of the largest food distributors. That's interesting. Can we get a brand with that, please? We got Walmart or Kroger, or who do we got? 6 out of 10 largest less than truckload carriers. Top 10 customers contribute 18% of total net revenue. Nice. Case studies. You know, they don't have to talk, I don't think, any of us into why it's better to go digital. We know that. You should know that. Billtrust go to digital or to market strategy, mid-market, enterprise, disciplined sales and marketing approach, multiple avenues for growth in the future. We've got strategic M&A, acquire attractive accredited business, new solutions, new verticals, new geographical models, global expansion. Okay, sounds like maybe they're just in America, or who knows. Business payments network, scale the business payment network and cross-sell other solutions, monetize payments, increase volume of payments processed, channel distribution, further penetrate the mid-market, direct sales, win new logos, and cross-sell, upsell in the enterprise market. All right, tremendous opportunity to monetize payments. Total payment volume, invoice dollar process, total payment volume, 49 billion. Making money. 120 trillion of business payments between companies annually. Okay, so this is interesting here. They're talking about subscription. They got contracted recurring revenue for software generating from tiered subscription pricing models on evergreen contracts. Evergreens are always producing like cash flow, right? They create cash flow, which is great. Subscription, transaction, invoice, payment, services. Okay. Professional fees generating from implementations and consulting. All right, so they do consulting too. Strong underlying operating metrics driving top line growth. Moving up. Everything's moving up. Impact of what's going on. They had a swift recovery. They were kind of going down. Okay, yeah, so when businesses are going down, as far as money coming in, they're going to go down. It just is what it is. But they've done well. In fact, they're above where they were. Year-to-year ratio. Looks like they're head pretty bull. They're slightly down as of recent, but September's historically a slightly dead month because mommy and poppy already spent money on the kids' school stuff. Sent them off to school, new backpacks. They already spent that. That's what this was right here. Total July net revenues, year-over-year invoice growth by industry. It's just showing everything's kind of going up. Medical is number one though. IT, medical, IT, and utilities. Unbelievable. Retail is down 21%. Insurance is 0. It's pretty interesting. Update on the financials. Still going up. Gross profit margins are going up. 69%, 65 to 69%. It's great. Financial projections. So we're saying it's going to continue to increase. So they can keep increasing their numbers. They're going to get more of a global platform. They're going to offer more products and more products, so you can offer the more percent you can pull. Estimated favorable shift in revenue mix going forward. The revenue split will change. So software and payments is going to go up, and services and others. Okay, great. Long-term target operating model. R&D, everything's going up. Transaction overview. Total source is basically like 1.5 billion. Unreal. It's a big deal. Man, what SPAC hasn't been $1 billion lately? A lot of them, right? Attractive initial valuation relative to peers. This is what we need to see here. Coupa. Here's Shopify. Okay, Shopify, Square, and Adyen. These are the ones most people are going to know. They're showing they're trading at like 38 to 26 times revenue, where Billtrust is only at 8.7 to 10.5. So that's really good. They're saying they're the leader in AR automation, proprietary platform, loyal enterprise customer base. Sometimes it's about sales, right? I mean, that loyal enterprise customer base said about 17-ish% is made up of that. Getting those big boy contracts with the medical suppliers that's great. It's fantastic. Everything's looking good. So, how's everyone doing on it? Anyone get into this or even hear about this? First time y'all heard it? Let me know down in the comments. I have not. I haven't even looked at it since the initial launch. I think it was yesterday. Yesterday it came out. Okay, I did move up a decent amount. So it was announced, and yeah, so that day it was trading the day before. This is another SPAC I've never even heard of. South Mountain Merger Corp. $10.15. How long has it been out? So it's been out for about, let's just call it a year, okay? It's been out for about a year, a little over a year and a month. It was almost at floor 10.15, and then boom, this happened, and it went up to 11.67. All right. I must have been looking at it early in the morning. It was at like 10.80 or something. What do we got here? It's actually held decently well. In fact, it went up the same day, where most SPACs will pop, drop, and lock, right? This has just been popping. It did go down, but not much. A lot of SPACs they'll get above 11.50-ish, and then they'll just bleed out. To me, for the SPACs nowadays, if something is going to stay multiple days at least 11.50, that's a good sign. That's a really good sign. How many SPACs do you know that have released lately where it's like they might go up to like 11.20 and then it's like back down to 10.20 and that's it? That's all she wrote. Interesting. I'll be watching this one. I'll be watching. I want to somehow find out more information about the collection part of it, because if they can open up and broaden that whole collection thing, there's so much money in that. It's insane. So if they could get big chunk of that, I'll be down to learn, down to find out. Let's take a look. Actually, I want to see the warrants real quick. Let's see what we got on those. Yeah, so there's a pop to like $2, pop to 2. They're chilling at $1.50. Pop to 2, and they've been closed at like 2.30. Just kind of going up a little bit. Might be a decent park. I mean, it seems like it's got a good business model. It's got good contracts. I like how the numbers have recovered a little bit and showing all that. If you haven't subscribed, please do it. Definitely helps out the channel. If you wouldn't mind sharing this video with your friends, please do it. It definitely helps out. And please give us a thumbs up. Take care.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwids.